Hello everyone, welcome to Financial Planning with Special Needs Hawaii. In this video, we will be going over the general characteristics of stocks and how you can generally expect them to perform in your portfolio. Before we get started, we want to say that any mentions of companies or securities are for educational purposes only and should not be taken as an endorsement of the companies or securities. We also want to remind everyone that if you want more information about investments, talk to a financial planner who can help you to create a plan that fits your specific needs and goals. So in this video, we will be discussing the following: the characteristics of stocks, stocks versus the general market, the general expectations associated with stocks, and charts that look at the trends of stocks and the indexes. Now, what this video will not be discussing is tax consequences. Taxes is a very broad topic, and to make sure that this video is brief and hits the main points, we will not be talking about it. If you want more information about tax consequences with your investments, it is best to talk to a tax professional. Investment subtypes. Stocks can be categorized differently, as each type of stock has its own characteristics. For example, blue chip stocks and penny stocks are different in their returns and their risks, among other things. So let's talk about stocks. Stocks are equity instruments, which means that you have ownership in the company. By their nature, you can generally expect higher returns from your stocks than bonds, for example. However, beware that stocks are subject to the age-old adage, high risk, high reward. Stocks are very volatile, and you can expect to see very sudden upturns and downturns, so it is as possible to get a higher return as it is a loss. Stocks are compared to common indexes such as the S&P 500 and the Dow Jones Industrial Average, which generally represent the larger stocks that comprise the US stock market. The index that tracks companies in each industry may also be used to compare companies to their competitors. Let us use Apple as an example to see what the volatility of individual stocks can look like. This is a chart of the value of the last 5 years of Apple. Over the last 5 years, there have been a number of ups and downs for the stock. At the end of 2018, from a price of $232.07, the value of Apple dropped to $142.19, all within a 3-month period. It climbed back up from that low price in 2019 to $211.75 in a 5-month period. But then it dropped again in 1 month to $173.30. Over the course of about 9 months, the value of Apple dropped, went back up, then went back down again. If the average person is tracking the value of Apple every day, seeing these constant changes would probably give them a heart attack. Now here is another chart of Apple. This time, the chart shows the comparison of returns over the course of 5 years. The dark blue line is Apple. The light blue line is the Dow Jones Industrial Average. The purple line is NASDAQ, which is another index. And the pink line is the S&P 500. Looking at the chart, the ups and downs of Apple look very similar to the ups and downs of other indexes. If we place the markers from the previous slide in the same spot here, we can see the trends mirror each other. As we mentioned earlier, the movements of individual stocks will generally look like the movements of the stock market. As we can see from the two charts of Apple, stocks can be very volatile, even more so than the entire stock market. When adding stocks to your portfolio, be aware that individual stocks bring this kind of high risk, high reward situation. What are the indexes that we compared Apple to? The first index was the Dow Jones Industrial Average, also known as the Dow. The Dow is an index that is comprised of 30 large companies that generally represent the US stock market. The second index was the NASDAQ. This is another index that we used, and it is an index that is filled with tech stocks. The third and final index was the S&P 500. It is an index that tracks 500 large companies that also generally represent the US stock market, in a similar manner to the Dow. However, since there are 500 companies in this index, it gives a much better idea as to the overall status of the US stock market. So to review, what did we go over in this video? The general characteristics of stocks, how they are volatile and bring a high risk, high reward situation to your portfolio. We looked at charts of the price trend of Apple, seeing for ourselves the volatility that stocks may bring. We also looked at charts of the comparison of Apple's return to other known stock indexes, and we saw how the movement of individual stocks look very similar to stock indexes that track the entire stock market. Thanks for watching. We have more information on special needs planning topics and general financial planning topics on our website at specialneedshawaii.com. Make sure to subscribe for future content on financial planning and special needs planning educational videos. We will see you in the next video.